Everyone, myself Vaibhav. In today's session, we are seeing consolidation with a downward bias happening in the DAX. And after this prolonged consolidation, I think the possibilities are emerging that we might see a breakout on the lower side in the DAX, even if we consider the case of US equity indices futures. Mostly, these all three key equity indices futures are trading with downward bias, so we might see further decline in the US trading session as well, and that is going to aid the our outlook for the DAX, and we will see if we can exploit this situation to our advantage. If we consider the data docket for the day, there were not many important releases coming in throughout the session. If we consider the European equity session, during that time we got the final readings for the employment change for third quarter, and as expected, there is a decline in terms of year on year, but there is a slight increase in terms of quarter on quarter. Also, we got the third estimate for the GDP growth rate, and it's also in line with the expectation and not much of a revision there. Moving on to the ZEW economic sentiment indicator, we have this turnaround and substantial rise compared to the prior month, and this is being fueled by the possibility of vaccine rollout, which we saw started in the UK yesterday. So that is also helping the turnaround in sentiments, and people are turning more optimistic for uptick in economic activity in coming months. So that has helped this indicator notch up the robust rise for the month of December. Moving on to the US session, we have this API, that is American Petroleum Institute's crude oil inventory data coming up, and for this week we are expecting the decline in the inventories, that is the drawdown in inventories of around 1.5 million barrels. This will be a sort of reversal after we saw the addition of almost 4.1 million barrels for the prior week, and recent uptick in the price momentum is likely to be sustained, and light crude oil prices, which are trading above the US dollar 46 per barrel mark, I think we have further room on the higher side, and this rally is likely to even get the light crude oil prices closer to the US dollar 50 mark in due course of time. Now let's move on to the technical segment. Here we will first see the DAX technical outlook, and then we will also consider what's happening in the dollar index. Let's start with the DAX technical outlook. This is the daily time frame chart, and this consolidation phase in which the DAX has been fairly range bound, and if we consider its price action, the range has increasingly become narrow, and as a result of that, the ATR has dropped significantly. It has gone below the 200 mark for first time in many months since this volatility rose in the early March. We had not seen the ATR falling below the 200 mark, and now that's happening as we saw this very range bound consolidation in which there isn't much selling pressure either, but given the robust rise and this prior resistance zone, we are not really seeing any further fresh buying either. So as a result of that, as a result of indecisiveness, we saw this range forming in the DAX on the higher side around 13,200 mark, and for the day also I think the bias is slightly bearish, but from the longer term perspective the situation is still bullish. But in market mover session we more or less target the short term trade, so from that perspective we will see if we can find out the optimum entry and exit points to look for the trades into the session. This is the 4 hourly chart, and these almost flat moves being observed in the DAX has also had an impact on this regression curve, which was steeply inclined on the higher side earlier, and as the prices didn't really move much, we saw gradually this decline on the lower side, but the pivot point series is still pointing to the undertone being bullish, and we have the price action caught in between the support on the lower side of the central pivot point of the pivot point series for this month. And on the higher side, we have the resistance, but that's pretty far. That is almost 14,000 mark, and right now we are not anywhere close to that. More than 5 percentage point up move is needed before we can get to that resistance zone. So we can trade with scalping techniques in mind. We can't really go for big swing trades as of now, as we have seen already robust rally, and that diminishes the possibility of fresh big rally on the higher side. Of course, it can happen, but my take is that we will see some correction happening from the current levels, and then eventually, after consolidation, we can even see a fresh leg of rally on the high side, which might take the DAX towards all-time highs, fresh all-time highs. But as of now, for today's session, we are more concerned with the immediate outlook, and that I think is slightly bearish. So we will try to figure out the optimum entry and exit, which can be found out using this confluence zone of the 50, 100, and 200 SMS. We have this convergence taking place closer to this 13,300 to 13,250 mark. So for a price band of around 50 pips, we have these all three key SMS converging, and I think this is the price area which is likely to act as the near-term resistance zone on the higher side for the DAX. And here we saw after fresh decline below this 200 SMA line for next 2-3 sessions, the DAX 200 SMA line has been acting as the near-term resistance, and we saw on multiple occasions the selling pressure pushing the DAX price lower. Even in today's session, we saw the selling momentum pushing the DAX closer to the 13,200 mark. As of now, the DAX has climbed back, and some of those early losses have been reversed, but that might be the fresh opportunity to look for fresh short selling trades. And as long as the DAX is holding well below this 200 SMA line, I think there is this opportunity for us to get involved for short selling trades, the sell trade, and the price band of around 13,270 to 13,300 can be utilized to look for a fresh opportunity after due consolidation. And on the higher side, I feel the stop loss of around 13,350 or just tad above that should be good enough. So for a risk of around 70 to 80 points on the lower side, we can target almost 150 points, as we are anticipating the decline to decline in the DAX to eventually go for fresh swing low below this immediate swing low, which was formed there around 13,160 mark. And if that is going to be the case, we will of course have the risk reward ratio in our favor, and risk reward ratio will also be as per our minimum requirement of 1:2. Now moving on to the dollar index technical outlook. We are considering dollar index after a long time, and in the meantime, we saw the dollar index breaking past this immediate support area, and the last couple of months of consolidation lows were broken, and we saw these fresh swing lows being formed. And now for last 2 to 3 sessions, it has indeed found some support on the 90 mark, and there it is consolidating with some buying momentum on the lower side. So if we look for the swing trades, then I think the undertone is still bearish. But if you are looking for some scalping opportunities, some short-term trades, then I think the field is wide open, and we can try to play as per the evolving situation. In that case, we have to keep in mind the regression curve, which is still steeply bent on the lower side, but the price action has now moved to the upper band of this regression curve, which is likely to make this regression curve more flatter in due course of time in next couple of sessions. And also, if we consider the pivot point formation, we saw this fresh break below this first support of this month's pivot point series, but then the dollar index hasn't really given up on it, and it is now again trying to climb above this support area. And I think if the dollar index is able to do that, and if it is able to hold above this S1, then in due course of time for dollar index, we might see short-term revival happening, and that might push the dollar index even towards the levels of 92 for coming sessions. And if that is going to be the case, I think we have to first figure out what will be the levels which we can target for the fresh buying opportunities. And I think we have to be mindful of these prior swing lows, and as long as the price is holding well above it, we can be expecting the retracement to take place and take the dollar index toward these 200 SMA or even beyond that. But we need to be containing our losses in case our anticipation turns out wrong, and for that we will have to look for sharp entry and exit points which will cut down on our possible losses while trying to maximize the profit. And in that quest, I think we can utilize these SMA convergence. These 50 and 100 SMAs are converging towards, and if we see that the dollar index is able to hold above these prior swing lows, and if it tries to get closer to this immediate swing high, then by tomorrow's session we might even see the 50 SMA crossing above the 100 SMA, and that will be a further confirmation of the possible retracement taking shape in the dollar index. And on the higher side, we can even target the levels beyond this immediate resistance zone of 200 SMA. So that being the case, I feel we can keep our stop losses just little below this immediate swing low, which is there around 90.5. So for a stop loss of around 90.4 to 90.35 can be used for the stop loss in today's session. And if we can get the entry point anywhere closer to this confluence zone, that is the price range of around 90.7 to 90.8, we can go for the trade with the stop loss being of around 30 to 40 points, and on the higher side we can target almost 70 to 80 points, and the risk reward ratio will also be in our favor as we will be targeting the price levels beyond these 200 SMA. And if that does happen, then that will also signal the possible reversal in the dollar index technical outlook. So that's it from my side for today's session. If any of you have any query or any idea to share, you can write it in the comment section, and I would be more than happy to take the discussion forward. Before I sign off, I would also like to remind of the risk associated with trading in the financial instrument, and one should be careful while using the information provided. Have a fabulous day ahead. Goodbye.